Hello and welcome to the Fibonacci video for Friday, December 29th. This is David, and let's kick things off by taking a fresh look at Tesla. This is a name which we've been tracking for quite a while since it began, right? This move upwards from a 204 and 26-cent Voodoo Fireline back here in early to mid-November. And we've been tracking its path upwards towards a potential destination at a companion fire line up here at 203.73. And we've chatted several times about things that are keeping this on track. Most recently, a couple of weeks ago, talking about so long as pullbacks hold this lower snow line, and we got a little bit of a warning sign back here, but we did regain that lower snow line, and it kept things on track towards that 283.73 destination, which we have had in mind. Now, from here, all bets are off now that that destination has been met. And you can see that when we did get to that level yesterday, we poked ever so slightly above it and then just fall apart or fell apart. And that is one of the reasons why we pay so much attention to these levels. At this point, in order to reset a bullish roadmap, we either need to come in and get support back above 283.73. That is, not just poke our head above it, but see Tesla come up, pull back, and establish a support level above there, or find a lower level to establish support again, either this 204 quarter level or one of these tree lines in between. In the meantime, we're now back below both of these snow lines. And so long as that remains the case, the next place to map to is the 241.02 tree line to see if we make a decision there, or if instead today's excursion below sort of this 249.69 level, if that turns out to be ephemeral and we get back above and find support and keep going up, then maybe it can map up there. But you can see why the right thing to do was to take profit at targets, and we're going to have to wait and see what is next for Tesla. The bigger question that I have at this point is, what about the market broadly? And for that, I'll come in and take a look at the S&P 500 as my proxy, and you can see how yesterday, right, as Tesla was going up and making its high at a fire line, the S&P 500 came up to a tree line. Now, tree lines are not as important as fire lines, but in this case, and in the case of the S&P more broadly, the levels are much more dispersed, right? They're much farther apart. So you're going to have to go a long, long way in order to get to a fire line, right? We held a fire line back here. Let's zoom out a little bit, right? We held a fire line back here in early or late October, right? That's what sent us up to this tree line level. And now the question is this a place that we come back from, at least for a larger pullback, or do we eventually get support above that level and then head up? And I'm going to process this in very much the same way that I process Tesla, right? Getting above and getting a pullback from somewhere above that tree line that finds support and continues up. That would be a strong sign that the market broadly is continuing up, and I would use that as an opportunity to add to long positions so long as we stay above that level. To the downside, starting to break below levels like this 46.84 skyline would be the earliest sign that we were building a Voodoo Lines roadmap away from the tree line to the downside. Similar to the same idea that getting above the 48.50 skyline up above the tree line would paint, set up a roadmap to the upside. So we've got those levels, and those are what I'm going to be watching, in addition to whether we can get support above the tree line. On smaller time frames, there may be some clues. Just keep in mind that action, especially at the end of the week this week, can be very misleading, and that our levels may not come into play as closely as we would typically like, and that the patterns can be sloppier than we would usually like. But hopefully those will start to clear up next week when volume comes back into the market. But with that said, the move down from yesterday's high looks into today's low. It looks like a trend move. And so there is some potential that it continues, right? Meanwhile, today's bounce is looking like it comes up to a 61.8 retrace of the move down from yesterday's high. That's an interesting spot to see if we turn back down. Now, there is still a 78.6 retracement that we could turn down from. That's up at 47.84, just below, right, that 47.87 tree line area. And if the bounce or any additional bounce, should we get it here at the start of next week, continues to be choppy, and I would argue that the bounce from today's low was choppier than the decline that we saw, right? If we continue up into that area choppily and turn back down, that would be a warning, all right? The stronger signal is still going to be back below here, right? Now, the other thing that would warn us that we were potentially heading down in a trend-like manner is if the next leg to the downside is materially longer than this move down from yesterday. And I'm going to continue to use the Fibonacci 161.8% as my measure for materially longer. So if I just measure not from the absolute high of the day yesterday, but the afternoon swing high, which is just a tiny bit below, and that means the levels will still be relatively close, whichever one you use, but that would argue that if this gets to 47.10 or so, again, not too much above here, but that would suggest that this move down from yesterday was turning trend-like at larger degree and increase the odds again to the downside. Beyond that, again, like I said, the patterns this time of year are sloppy. I would think that getting back below this swing low, right around 47.62, would increase the odds. I'm not really sure about this late day sell-off. You see, we had this little spike down that failed to take out that level, and then we bounced. Again, it could be a head fake, and because of that, I really would prefer to see these larger degree breaks, right? A break of one of those skylines in either direction, and not rely too much on the very short-term patterns and the very small degree bounce that at least has paused so far at the 61.8 retrace, although it could pop above. I'd prefer not to use those as much, right? But that may require a little bit of patience. In any case, this is what I'm watching leading into next week when we kick off trade on Tuesday. I hope you found it useful, and I hope you have a fantastic New Year's, and we'll see you back here for the next update in 2024. Until then, as always, good trading.